how to profit in a recession. So we're talking in this video about how to profit during a recession, so stay tuned. So according to Charlie Munger, who is the partners in Berkshire Hathaway with Warren Buffett, he said earlier this year in a stockholder meeting that we are in a bubble, and obviously that bubble bursted. So in 2021 the market was just amazing, and 2022 we had a lot of stuff going on in the market. It was not good for investors. However, like this recession, this recession to most people could be up to 2 years. What the Federal Reserve right now does is they're trying to restore inflation to 2%. So there was just, Jerome Powell just announced a 2%, not a 2%, a 75 basis point rate hike in interest rates. So, and that's one of the tools they're using to restore inflation. So that's what they did just recently, and it really dropped the market dramatically. According to Chamath Palihabitiya, it took me a long time to say that name. This is going to go on for 18 months, and I've heard other hedge fund managers to say that it takes up to 18 months. So Chamath Palihabitiya is the CEO of Social Capital. Ray Dalio thinks it might even take longer than that. He says what the Fed's doing right now is a little bit over the top. This could mean that we're going through a stagflation. So a stagflation is when inflationary rates stay high and the economy is still low. So that's really something to be concerned about. So Ray Dalio is the founder of Bridgewater Association. So it's one of the biggest hedge funds in the world. And yeah, so he says that excess stimulus, and pretty much everybody says this, there was too much stimulus giving out. And that caused high amounts of debt, and it caused inflation to go up dramatically. So how can we benefit from this? Well, according to some of these hedge funds, Treasury Bonds are a really safe way to preserve your money, but they really still only give you like what, 4%, 5.5%, something like that in return. Well, inflation is up at 8.2, so you're still losing money, and with Treasury Bonds you're kind of like tied in for a long time or period of time, at least a year or two, I believe. So that might also not be the best way to deal with it, but it's better than just keeping cash, because cash is losing value dramatically right now. The dollar is extremely strong, which is not good for the market, because when the dollar is so strong, that makes goods more expensive in other countries, obviously in our country too, and that causes the consumer, not to purchase as much. So that's why you see a lot of these like Apple stocks falling. Well, Apple kind of noticed that their cheaper iPhone is not being purchased as much. So they cut that out of production for right now. Everybody's kind of like trying to save themselves a little bit through the recession. So there's a lot of layoffs, and there's a lot of cutting in production. And the labor market is still not where it should be. So we'll have to deal with all of these. So Charlie Munger has 3 rules. The first rule are, if you're investing, stay rational. Don't just blindly invest because something is going down. Invest, in quality. Second is think long term. So don't think you're gonna make a quick buck unless you're a professional trader, or you can sit on your computer all day long while the market is open and watch everything and know how to analyze and do your technical analysis correctly. And then, of course, invest in high quality equities. So what are high quality equities? Well, things that are around for a long time. If you look which companies have been through so many recessions, it's usually the ones that are 50 years old or older. And so if you want to stay safe, invest in those. Invest in dividends. That's another thing I've read lately. It's like you're investing in dividends dividends, even if the stock goes down, it still pays you. And the funny thing is, because dividends goes like, they're paying $1.50 per share. Well, when the stock goes down, they're still paying that $1.50 per share, which means now the percentage is much higher than it was before. So you're making a buck. So during a recession, you could lose 30% or more. Some people lost 50 and more percent and of their investments, and that could also be, depends on when you bought it. Altogether, the saying is, don't sell out, because the only time you lose is when you sell your stocks and you sell your assets. So, this is another thing. You get a lot of, if you're already investing, you get a lot of messages or emails from your brokerage account, and they will encourage you to do margins and to trade equities. And the best time to trade really is, like they say, like all day long. No, yeah, maybe, but the best time to trade is the first 30 minutes or the first hour when the stock market opens, and then the last hour, which they call power hour. But if you can be on your computer, don't do this from your phone, especially if you're not skilled. Maybe if you're skilled, you can do that. You can make your due diligence, and you can look at the stock market the night before or pre-market and see where things are going. And then you can, invest in those positions and set your stop loss and see, so it can be sold for you. But don't go crazy. Don't do margins right now, because if that market falls more, and your brokerage is going to want to have their money back. And the only way, if you don't have that money laying around on the side, is to sell your stocks. And that's not a good idea. Like from the beginning, I didn't want to do margins, because it's just a little bit too risky for me. I'm a risk taker, but it's a little bit too risky for me. So I'll have a cash account. But it's up to you. If you want to take that risk, go ahead. I probably wouldn't suggest it. Then, of course, keep your emotions out. You see your stock going down. And a lot of my stocks are in the red right now. I made really good money last year, and this year I'm in the red, and I'm just, I know eventually it'll come up. All you have to do is really research the stock market over the last 100 years, over the last 50 years. You see all these dips, and you see when people were selling because they let their emotions come in. And they're selling in the low. So they bought high and they sold low. That's just really not what you want to do. If you go to your local mall, let's say, and you buy a pair of shoes and they're on sale, that's what you want to buy. You don't want to buy them when they're all at all-time high. You're buying shoes at $300. Now they're selling them at $100. You buy them at $100. So, but people don't want to do this with their assets, with their stock eventually. So, let your emotions come out of there, and just use high quality equities. Invest in companies that have been around for a long time and that are not going anywhere. Make sure that that they have cash. Most of them have cash on the side that are quality. Don't go into these little stocks, these penny stocks and all that, because they could go bye-bye. They could go away, they could file bankruptcy, so don't do that right now. And see where your hedge funds right now invest, because a lot of them are investing in a lot of equities right now. Warren Buffett invests into Oxy, and you can follow them and see where they're investing. But simply just do what they do. Don't sell. They don't sell. They're investing. So I hope you like this video, and we'll talk a little bit about which stocks would be a good investment in the next video, and I will see you soon. Thank you so much.